Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, June 18th. It is 6:15 a.m. as I'm starting the video. And as always, don't forget you're welcome to run the video at 1.25 or even 1.5x to cut the run time. So let's take a quick look at futures. Oil is down 0.6%. Gold up 1%. Equities are flat. On the macro front, everything's going to revolve around the quad witching option expiration today. You got quarterly expiration, you've got individual stock expiration, futures expiration, the whole 9 yards. That can lead to added volatility, and also you've got market makers out there that know which strikes have a lot of premium built into them, either on the put side or the long side. So there's extra motivation there for the market makers to keep price within those ranges. And so all kind of stuff can happen today. The last few times it hasn't amounted to much, but that's how the market goes. When you're all ready for something, it doesn't happen, and then all of a sudden, you know, quad witching doesn't matter and things go crazy. So definitely for sure, if you've got options expiring today, make sure you deal with them so you don't get any rude surprises tomorrow morning. Make sure you run down your list and make sure that no options that are expiring today have been forgotten about, and then, you know, either close them out or roll them out to a date in the future where you want to maintain that position. So yesterday was a really interesting day. You know, we talk about the FOMC and the having the market adjust to whatever the FOMC statement is. Often the initial move is a head fake. We talked about that, and we talked about that it may take even several days into next week before that all plays out. But let's look what happened yesterday. There's been a general market view of these consensus calls, and let me just run down what they are because I think it's important. Short US dollar has been a consensus trade. Short TLT, short the bonds, has been a consensus trade, which is rising rates. The inflation narrative has been out there. And then because of that, those macro calls, that leads you to be long oil, be long commodities, be long precious metals, be long the reopening trade, be long the reflation trade, be long cyclicals, be long industrials, real world economy, be long value. Yesterday, those got annihilated. Why? Well, one big reason is yields reversed. We had the 7 basis point pop out of Powell on Wednesday. They faded that whole move yesterday. So now rates are back down to 1.51%. I think they started with Powell at 1.49%. So they faded that move. Over in the TLT, yesterday at the high, we were almost touched the declining 200 and this declining trend line. Now, obviously it wasn't truly tested yesterday, but that would certainly be a line in the, you know, on your chart that you want to pay attention to, because if there's a breakout here, all hell is going to break loose, because that would correspond to a break in yields, probably down, you know, down towards 1.4%. And if there's a breakout there, then we got real issues going on. So anyhow, TLT was up, but then finished a little bit lower. I still think the key is 140 on the TLT. If we drop below that, which would mean yields reverse yet again and start going higher, then you have downside targets at 138 and 135. But right now, I think all eyes have to be on the 200 EMA and this downtrend line on TLT to see if that gets truly tested. Also, the dollar was up again yesterday. And the combination of those things, rising dollar and falling rates, is the exact opposite of what you want to see on gold. And it got, I mean, just totally liquidated yesterday. What was it, down 3%? It was down worse early in the morning. But if you're interested in a, if hopefully you got out, or if you're a long-term holder, you're just saying, hey, I got this part of my portfolio. Yeah, it came down, but I'm just kind of holding my 5% allocation or whatever it is. Down here near 165, you've got a pretty decent ledge of support. If you wanted to get long against 165, that would make sense. Even just playing for a gap fill back up to 171, that would be a decent trade. But other than that, if 165 fails, you've got a volume over price level here at 161. And then below that, you're back at the old lows, back at 157. So that's how kind of gold shakes out. But dollar higher and real yields higher, the gold is just not going to work. So getting back to that consensus macro, part of the long cyclical, long industrial, etc., is the idea that you want to short bubble stocks. Stocks with big dreams but no earnings, even losing money on a quarterly basis. And in general, that rising rate environment is going to be headwinds to tech in general. But we've seen the opposite, right? Yesterday, EV ripping, solar ripping, big cap tech ripping, semiconductors strong, software strong. So now the key is, are those durable changes? Has the narrative permanently flipped, or is this a head fake of a head fake? And I hate to say that, but the head fake was on Wednesday with yields rising, and now yesterday yields falling just as dramatically. So everybody's piling into tech. Which one is right? Which one is right? So stay nimble. But that's kind of how I see it right now. So let's go through the charts real quick. SPY 2 hour. SPY could not break above 423 yesterday. You can see here the entire day it was pinned down. We did have a deep look into this gap, but did not fill it. So I think, to make a long story short, nothing's changed on SPY. Bulls got to break it above 423 to get anything going. And if they do, they can look towards this prior level here at 424.50-ish, with the all-time high up here at 425.25, I think is the number. Yesterday, if you're a nimble, active trader, all that volatility gave some nice opportunities. You can see, the rejection here at 423, and then the big sell-off, and then the V recovery back right up to 423. So there was quite a few intraday trading ops if you're nimble, if that's your thing, active trading. There are a lot of levels in here to work with, as far as where you would want to cover, where you would want to reverse. Not not totally easy, not a piece of cake. You know, trading never is, but there was certainly the volatility yesterday to make some money. Qs, as we talked about in the in the lead-in here, everybody was piling into the Qs yesterday. You saw that in the FATMAAN names that we're going to go over, the EV space, solar, etc. So yesterday, we see where we opened at. I don't know if this is even right. Looking at this thing's not making any sense. But anyways, we came down on Wednesday and we closed higher, and we said 342 was your level, and we broke above that right out of the gate and really never looked back. Now we're at all-time highs. All-time highs, you got to buy. I think your stop on the downside is 344. You wouldn't want to see that break and come back to 342 and blah, 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 blah. You know, so if there's extra volatility today and you're being nimble and you're actively trading that, watch for 344 to hold, or either hold or fail. I think that's your pivot point, and then you can go from there. Here was, we had this open, and it came back to this level here, which we had on the chart because this was like the prior high. Came back for a back test of this breakout and then finished nearly on the highs. So Qs are really, really strong. I would tend to favor those. Make price prove that it's not right. We talked about, is that a head fake? What would constitute a head fake? Coming back here and then closing below 342. If they faded this whole move here and then closed it back below 342, that will lead you to believe this whole thing here was fake and now back below 342. So that would be a line that I would have bold on your on your chart as for a longer swing type position. If you're in it for the long haul and you're not actively trading it, you want to see 342 hold. That was the important level on the way down that broke, and then that was the important level on the way up that was recaptured. So I would highlight that level if you're doing a swing trade or a position trade long. IWM was the flip side of QQQ. Yesterday was a day to be short IWM, and we had actually mentioned in the days prior, an interesting idea would have been long QQQ, short IWM, and if you did anything close to that, you're pretty happy right now because IWM is loaded with the reopening trades, financials, all those reopening names, the cyclicals, and they just got killed, especially in the morning. We had talked about 229 as being a pivot point, and we got this big sell-off, and then the second candle came down to this moving average, which is, remember, the 50. The 200-day average on the 2-hour is the same as the 50 EMA on the daily, and that's an important level. Came down to that level and reversed. Now, yesterday I had this. I got this trade, but I covered my short down in here near the lows, near that 50 EMA moving average, but I didn't reverse, and that was a big mistake because I thought, well, doesn't matter what I thought, it was wrong. the right trade to make there would be, okay, you covered your short, play for a bounce off of the 50, and then see how far that bounce will go. So don't try to get inside the head of price by saying, oh, well, I don't think it's going to bounce very far, so I'm not going to bother with getting long. That's a mistake. That was a mistake I made. So if you decide to cover a short because you're at support, it only makes sense to be long against that support level with a stop just below. So that was a mistake I made. What I did here on the 30-minute chart is I dropped in the Fibonacci retracements. You can see that price has bounced up to that 50% halfback level at 227.50. So that's your pivot for today. If price can jump 227.50, you can be long and look for a move back up here, or that halfback is a great shorting location for a move back down to test the prior low. And don't forget, we've got a big gap down here as well. So I think today it's going to be real interesting. Was this just a reflexive bounce from being oversold, and you get that halfback shorting opportunity, or can the bulls power it higher and reclaim these other levels going forward? So let's get into FATMAAN. A lot of interesting charts here. Facebook. Let's make a long story short. We've been in an $8 trading range. We've visited the top 3 times, and we've visited the bottom, well, let's call it here 4 times. 1, 2, 3, 4. So we're in an $8 trading range. You break out from 338, your target's 246. $8 onto 338. You break 330 to the downside, your target's 322. $8 from 330 is 822. That's your target. Within here, however, there's $8 to be made inside this trading range. So, for example, you can see here that we've had 3 touches of 338, obviously resistance. If you see this morning that price comes up here to 338 and stalls, the trade is to be short. And your first target is 334, and your second target is 330. If you get the breakout, then you're wrong. Flip long, because then you're in blue sky territory with no natural sellers. So this is a nice wide trading range that there may be opportunities for two-way trading. If you're more or less a long only and you got long down here and you're playing for a breakout, if you get that breakout, you were long from 330 at the bottom of the box, you get that breakout, roll your stops and your strikes up to 338 with a stop just below. Make sure you get paid for all this hard work you did, and then take the breakout for blue sky territory. Nice day on Apple. Got the gap fill here. We had this trade. We had this trade, right? We said 128 from the get-go, get long, and it's been working ever since. Stair-stepping higher, respecting the technicals, the levels that we already had. Now we got the gap fill, so now it's just a matter of follow-through. So you've got the levels to the downside, gap support. I dropped in a little channel here. Hopefully you want to see any pullback contained at like 131. Otherwise you drop out of the channel and there might be a pullback. But for longer term swing traders, position traders, stay long against 128 because you've got all the moving averages below on the daily chart supporting you, and then look for higher ground. Short-term traders, you break yesterday's high at 132.55, or even just wait right in here. Actually, that's the same level. The high was 132.55. So you get a break above that level, get long. You might get a lottery play today. Remember Friday. If you want to get a lottery ticket, whatever, just remember it's quad witching and they can do strange stuff. So it's not quite like a regular Friday afternoon. Tesla making some noise. Got a good bounce off this 595 and starting to peak above the downtrend channel that we've been watching for weeks and weeks and weeks. I still think the number is 625 and 640. You see breaks above that level and you see QQQ being strong, I would get long there. And those are your key levels. If you break above 640, then you got some real running room up towards 670. Microsoft got the gap fill. It wasn't easy getting there. They always make it hard. We had the breakout. We had the move up to 260. They pulled the rug, even dipped below, recovered it, and came back up from 256 to 262. Now they have filled the gap. If that's what you were playing for, mission accomplished. Now a breakout here will essentially be new highs. So if you are a swing trader or even an active trader, you break out to all-time highs, you got to buy that. No natural sellers above. Strong momentum going in the right direction. I think you got to take that trade long if you see a breakout here. And then of course you got your stop just below in case they reverse it. But Microsoft looks really good. What is even better is Amazon. Yesterday, we haven't talked about it in a while, but we got the free 50 club double. We had a low of 3401 and we got a touch of 3500. So that's your free 50 club double. And you know, this was another one that we've had every step of the way, and I hope you've gotten at least a part of it if you're interested in trading Amazon or whatever. But we had the break above 3250 where we said all the moving averages were on the daily chart, very much like the Apple chart. And once it cleared that level, we said there was one last chance for the bears to give a rejection, and that was at 3300. Where if you go back in the chart, there was actually even more levels where that had posed a resistance problem. But you had a power candle through that level, and you can see that it's just been working its way up inside this channel, kind of respecting all the levels that we've had. So, I mean, that's the way it's supposed to work. So, kudos if you were active trading yesterday with Amazon. You got to be pleased with a $100 move. I mean, that's how you make money in Amazon. Not that you can't make money back in here, because there were some good opportunities, but this is easier trading. I mean, you have to agree with that, where you've got some strong upward momentum, respecting all the technicals, getting unidirectional moves. I mean, yesterday, the market gave you no reason to be scared. Usually, it'll, give you a nasty candle and test your inner fortitude to see if you can stay long, in the face of that and shake you out. But yesterday, it was just all green candles the whole day. So that was great if you were in that trade. Google, up a little less than 1%, kind of underperforming, but still a very strong chart. It, along with Amazon and Facebook, they've all been strong. So here, just use 2435 as your pivot, and then you've got a high here at 2450. You break above that, back into blue sky, back into the channel, and then bulls are definitely, well, the bulls are still in the driver's seat, but short term, you break into new high territory, buy that, and then look for 24.90 kind of thing. On the downside, you see the levels here, 24.20 and then 2400. You know, the other day, if you had bought 2400, that was a great buy on that recapture, because then now you're already up $40 or $50. Netflix, I mean, still in the weeds, still building a big base down here below, you know, somewhere between 515 and 485. This thing has been thrashing around, hard to make money. If you're really nimble, I mean, you can do it, but really hasn't been the kind of action that would lead to, you know, camping out in a position for even, you know, a day or two. I think that level is going to be 515 when it breaks into this $35 gap. So, you know, Netflix has just really not been participating on any grand scale throughout this whole time period. Semis had a decent day. It was what, up 1.13%. But anyhow, we had the rug pull, came down to 248.50, which we had all along as a support level. That would have been the logical place to get long, to not only cover short, but to get long if you weren't in. And then you got the move, and then you got the recapture at 252. Even if you didn't get this reversal, if you recaptured the level from below, that's a buy. And then you got to move back up to the prior high at 255.50. So now in the middle of the range, I don't think you can do much. But if you got to pull back to 252, I would buy it. And if you got a breakout above the prior highs here, I would buy that as well. And we've got a technical target of 258 as a first stop. And then, you know, this is blue sky territory up here. So again, you want to buy that. Yesterday, I sent out a note on AMD with 82.50 being that breakout level. A lot of call action, a lot of option buying on AMD. And, you know, when you see that, a lot of these guys, you know, they were buying for Friday, hoping for that real fast move. They got it. Other people are, you know, playing farther out. I got July calls, so I didn't really want to actively trade it per se. Try to play for this breakout here of this downtrend line, and you know, get a, you know, more durable move up here. And you can see that, I mean, if you're saying to yourself, wow, man, I missed the move. No, you haven't missed the move. Why? Because here's the downtrend line and here's price. So you break above today's high, you get the breakout. So I mean, if you're trading on the daily time frame, you haven't missed anything. But what I like about this is what I like about a lot of those other trades is that you've got a cluster of all the EMAs below, and you've consolidated for a long time below this 82.50. And that was what I really liked about the setup in the first place, is that this was a long consolidation, and then you got the power move out. So I'm hoping for some follow through here, and hopefully, you know, carry that higher into July. This was a trade that I sent out early yesterday morning. I had an alarm set. We had flagged it earlier, but this is off to a great start. NEWR $10 gap, playing for a gap fill on the break into the gap. Now today, or in the days ahead, if you get a back test of 70 that holds, I think you buy that and then look for higher ground. Now on the option chain, I will tell you, it's not the most liquid in the whole wide world, and the spreads are a little bit wide. So, you know, set a limit order and see if you can get a fill rather than, you know, just paying the ask, because they were a little bit wide. And I think if you're patient, you will get a fill. So do your best not to give away the farm on those option spreads if you can help it. CrowdStrike was one of our ideas from the other day. So we had the little breakout here above 230 on this big cup and handle setup with a projected move, you know, way up there. This one's off to a good start. So if you had taken it down here, I would just ratchet up your stop to break even. You know, if it comes back here and back test the neckline, I mean, it's already done that once, but it could do it again. If you got that move, I'd buy it if you weren't already in. So anyhow, that's off to a good start. And also Palo Alto was the very same setup, just obviously at different levels. It is breaking out as well. Yesterday, we had PayPal as an idea. Got the breakout. If you're not in it, look at it today. I think you can still be long against 275 with a stop just below. And, you know, I think this is poised to go higher if, in fact, the tech trade is on. Looking at the other side, we had Caterpillar as a short idea, I don't know, several days ago. Back up here, and we've gotten a power move down. So I'm still in that trade. I told you I had a 220 by 200 July put spread. So I'm still in that, looking for a move for a touch of the 200. If I get that, I'll close the trade. It'll be maxed out, and then there would probably be a bounce there. But we've dropped below this big area of value, so now we're in a big price void where there's not a lot of, well, there's hardly any technical support right there. So what I'm hoping for is a continued move lower down towards 200. Another short idea we had was Louisiana Pacific. We had noted price had dropped down below all the moving averages, below key support, below the 50. I'm in the trade, and we've gotten a nice move down. Now what we did put in a little hammer yesterday, and so, you know, that has the potential of putting in a little bounce. I may, you know, if it looks like it's going to, you know, really hurt my position, I'll just take profits and reload if there's going to be a back test. But right now the trade's working. So anyways, those were good trades that are off to good starts. So that's been helpful. So let's see how quad witching wraps up today. Let's see if there's follow through on tech to the upside and further weakness to cyclicals, industrials, financials on the downside with falling yields. I think it's going to be real interesting how we close the week and move into next week to see if the new narratives begin to emerge that are backed up on the charts. So if you're new here, I hope you like the analysis. I think, honestly, if you stick with it and trust my levels, you'll become a better trader because you can really focus on your execution rather than, oh my God, do I have the right levels or not? I'd like to think that my levels, for the most part, are right on the money. And you can see that in the charts. And I hope you benefit from it. So hit the subscribe button, hit the alarm bell. You'll get my content. There's other links in the show notes to visit the blog site. Lots of information there. And longtime listeners, I appreciate your support. Hit the like button. Give me a positive comment. Let others know that you appreciate the content and that it's helping you. And if you want to go the extra mile, I always appreciate a retweet or a reposting of my content on other forums you may be a part of. So, and one last thing, I'm going to start a separate video on all the SPDR ETFs that we had gone over before the FOMC, and then see where we're at heading into next week so we can know which sectors to be long and know which sectors that aren't doing so hot. So this has been Chris Buss with Traders Profit Compass. Have a good day of trading. Talk to you next time.